All right, the objective of today's walkthrough is to do a deep dive on SpaceX. Again, understand the financial drivers for the business, the performance over the last few years, and do a quick evaluation of how SpaceX is doing versus its peer group. Now, SpaceX is set to open in the market sometime in the next month or two at a $1.75 trillion valuation. Now, that valuation itself sets alarm bells in my mind because the round of valuation that was led in December 2025 was at a valuation of about $800 billion. So the number today is about 2x or more than 2x in less than a year's time frame. So folks like the Googles, the Fidelities, the Sequoias, the Ron Barons of the world, all of the employees who've been raking in the stock options over so many years have been much earlier to the party than you and I. And we are coming in at the tail end at a valuation that is pretty high. Now, given that the revenue for the business in 2025 was about $18.7 billion, significant. It had an EBITDA, adjusted EBITDA of $6.6 billion. Again, these are company reported numbers. I'm not a big fan of EBITDA, but again, just reporting what the company has laid out there. And Starlink is the key business there within the SpaceX umbrella. It brings in about close to it has about 10.3 million subscribers, and we'll see shortly as to how they are doing from a performance standpoint. All right, let's move on to the next one, which is the consolidated financials. The financials, the company has done very well for itself. It was doing about $10 billion in revenue on a top line basis, doing about $18 billion run rate in 2025, did about $4.6 billion in Q1 of 2026. But the concerning number is not the revenue growth. The revenue growth year over year has been about 33%, which is phenomenal by any stretch of imagination. But the concern here is the capex. The capex has increased from $4.4 billion in 2023 to $10.1 billion. And the reason for all of this is the XAI acquisition or the XAI merger, whatever you call it, because that is driving the large majority of the capital expenditures, which is resulting in the free cash flow of the business being significantly in the red, minus $9 billion compared to about $105 million profit that they churned out back in 2023. So that is certainly food for thought for investors, because the capex story is not going to change because XAI is part of the ambit. And I think what Musk will have to do is generate enough computing resources for its captive requirement of XAI, whatever applications they're planning, but also serve as a server farm, serve as a hyperscaler and compete with the Googles, the Amazons, and the Microsofts of the world in providing computing power. And they're doing exactly that with Anthropic, wherein they've signed in a $1.25 billion per month deal with Anthropic, which is a good development, where they are renting out some of the extra capacity that they have in Colossus 1 and 2. And that is the bread and butter business model of the hyperscalers. Now let's move on to the next one, which is a segment-wise breakdown. Again, if you look at this at a high level, the business line which is keeping them afloat is Starlink. Starlink has a capex of only about $4.7 billion, $4.1 billion. Its revenue was about $11.3 billion out of the total $25 billion that we talked about. Not even 25 actually. This is 11 plus 4, 16 plus 4, 17. So that somewhere, so it constitutes more than 50% of the entire revenue for SpaceX. The revenue growth has been stupendous, about 50% year over year. Subscribers are 10.3 million, and the total available market here is fairly large because there are a lot of underserved markets in sub-Saharan Africa, even in rural India, and even parts of the US, believe it or not, where there are dead zones which are not operated by cell phone providers but are critical for businesses. And Starlink will be supplying internet, as you've seen even in the war front lines in Ukraine, where they have been very handy for the Ukrainian army. But that being said, the one concern that I see is that the ARPU that we have seen, there's been a significant dip in the ARPU. The ARPU is about $66 per month, and I think that's come down significantly over a period of time. And if this follows the trajectory of a cell phone provider or of an internet service provider, where the ARPU's just come down, so the margins are going to have a downward pressure. And today, Starlink is the mothership which is funding the entire vehicle for the space exploration ventures of Elon Musk. So all of what Elon says of colonizing Mars, of kind of like having rare minerals be taken from some of these other planets, all of that is currently a figment of his imagination. It might become the reality, but again, the business that is funding it is Starlink, and I think the margin pressure there might be something that investors should be keeping an eye out on. And again, let's look at the revenue trend, right? Again, Starlink here is the biggest piece, moving from $4.3 billion to $11.3 billion over the last 3 years. The space revenue hasn't really seen a big jump. It's about $2.8 billion in 2023 to about $4.0 billion, which is significant. And XAI has done a lot of revenue, but the margin story is not very appealing. Now, the capex explosion in the XAI business is something that we already spoke about. We have capex that has increased from $463 million to $30 billion in Q1 of 2026. And this number is, like we said, just going to increase. The question is, do you see the revenues improving more or increasing faster than capex? And are you going to see a tangible impact on the free cash flow number in the foreseeable future? I don't think so. As an investor, as a fundamental investor who looks at valuations, even if I were to apply the Elon Musk premium here, the capex numbers just don't jive, just don't add up. And we talked about the ARPU decline. The ARPU has declined from $100 per month to about $66 per month, which is a significant decline in a span of less than 3 years. And subscriber numbers have certainly gone up, no question about it. But with this number going up from $10 million to even, let's say, 100 million subscribers, and if there is a sharper decline on the ARPU piece, we are going to see some pressures around how XAI is going to creatively fund some of its capex projects. And then let's finally look at how SpaceX is doing vis-a-vis competitors. Now, SpaceX, OpenAI, Anthropic, NVIDIA, 3 of these companies are going public in the next few months. NVIDIA is already established and is the one that's funneling and fueling the AI revolution. If you look at NVIDIA, it's got a $5.4 trillion market cap. So the law of large numbers is certainly against it. But if you look at the growth of the business here, this line over here, the revenue growth has been 66% CAGR per year. What that means over the last 5 years is that, applying the rule of 72, the business and the revenue is almost doubling every year. It's doubled to come to about $216 billion in the last year, and the run rate has accelerated even further in Q1 of 2026, where the year-over-year growth in Q1 was about 86% without China being included in the mix. And if you look at the price to earnings last 12 months, it's about 33 times price to earnings, fairly richly valued. But again, for a company growing at 66% year over year on an average, and about 85% or 70% that is expected to clock this year, it doesn't seem expensive at all. And if you were to look at the interplay and the dynamics here, SpaceX is a customer of NVIDIA. OpenAI and Anthropic are customers of NVIDIA. Every AI company is going to be using NVIDIA chips. They're going to reduce their dependence on NVIDIA chips because they possibly are at the higher end of pricing, but there's significant demand for it, due to which, even if the market gets fragmented at the lower end for inference or for some trading actions which possibly the TPUs from Google or Amazon cater to, the market for NVIDIA is still a huge one and a very, very profitable one. So as an investor, you would have to make an evaluation whether you see this $5.4 trillion market cap going to about $10 trillion or $15 trillion over the next 3 to 5 years. Again, very, very big numbers that we haven't seen for a company before. Or do you feel that Elon is going to be weaving some magic and going to get this $1.75 trillion valuation to somewhere in the NVIDIA range of 5.4 in the next 5 years? But a lot of the bets that he's making are extremely long range, with the exception of Starlink, and none of those are going to be panning out and driving fruition in the next 3 to 5 years. So I'm skeptical of how SpaceX will deliver returns for customers. And the valuations that we spoke about right over here. So target market valuation is $5.4 trillion for NVIDIA, which is about 1.75 for SpaceX. OpenAI is about $800 to $1 trillion, give or take, and Anthropic is at about $400 billion. Now, if I were an investor, I would say I would be more inclined to look at OpenAI or Anthropic, especially Anthropic, because Anthropic has got a very strong enterprise base now, and it's expected to break even or drive a profit, I believe, in 2028. That's right, 2028 is where it's expected to be GAAP profitable. So from all of these companies that are coming into the IPO market, I would regard Anthropic as the most compelling. Also, the revenue growth number of 1100% per year is just nuts at another level. So let's not even get there. I don't think that trajectory is sustainable. But assuming that they keep a stranglehold on the coding market, which they currently do, which is the piece of the market that they've cornered off, I think they will still do well at much lower growth rates going forward compared to the other three. But having said that, Charlie Munger said something very famously about Elon Musk: never underestimate someone who overestimates himself. So that is the story of Elon. That's the story of all of his companies. Unfortunately, even Tesla follows the same trajectory where it's hyper valued. But again, there is a segment of people who believe in him and who want to invest in him and him alone. And all power to them. This is in the too difficult pile for me. For SpaceX and OpenAI for sure, but Anthropic is certainly something that is worth a consideration. All right, that's it for me. Take care. Have a nice one.